guys, and welcome back to the Fourth Revolution. I'm gonna stop calling the quarantine edition because this remote videos could be indefinite for as far as I know. So today we're talking about oil and the huge tailspin we saw since the beginning of 2020, and even since 2018, we've seen a big drop in oil prices as global supply surpasses global demand, and that really kind of hit the fan during this pandemic when demand flattened completely and supply continued to flow, and there was a massive glut on our hands. And it was actually the largest excess of oil in U.S. history, and people actually ran out of places to put this oil, which led to this unprecedented negative oil futures rate, which we have never seen in the history of trading. So oil is beginning to bounce back from that negative rate. Right now, we're back up to I think $42 for crude, and it seems like we're going to continue higher as the market starts to recover here. So let's dive in and take a look at a couple opportunities in the space, and I'll do a little market overview to start out here. So after the S&P 500 yesterday hit all-time highs for the second time this year, we had a little bit of a sell-off after the markets saw what they wanted from the Fed minutes, and we pulled some profits off the top. So today we're rebounding a little bit from that marginal pullback yesterday, and I expect that we could go higher. We're probably going to retest this this high right here, which really didn't break through too far beyond our February high over here. So I say we retest this, and we could either break through for a strong rally, or get a pullback depending on what's going on in the Democratic convention, Republican convention next week, as well as some of the trade developments that could happen in the coming weeks, which with this trade war starting to heat up once again. So watch out for that. So today, talking about oil and its recovery. So as you can see, oil prices have kind of leveled off. We've obviously hugely recovered from this negative $40 that we saw on April 20th. And we are starting to level off here at 42.50 roughly. And I don't think this has much more of an upside to it. We still have a massive supply that these big distributors need to get rid of. So I don't see pricing pressure going up much further than it's at today. But that doesn't mean that these oil companies aren't going to recover, because demand is obviously going to be reinsurged into the economy for these oil companies in the future. So the real question is what's happening with oil? A lot of people are concerned that we're moving too quickly towards alternative energies, like natural gas, hydrogen fuel cells, biofuels, solar, wind. But right now, for these energy companies, oil is still the most lucrative commodity, along with liquefied natural gas, which is actually on the rise as of late, with its lower emission qualities and its easily transferable properties. So Chevron is my oil pick, or energy pick, should I say, and it's outperformed its cohorts in the last year, or I guess so far in 2020, and that's because of its positioning in the market. It was able to buy up a bunch of property at a lower price because it did it in smaller increments in the Permian Basin, as well as the Marcellus Basin in the Northeast. So they're well positioned to continue growing. They're considered one of the largest growth energy stocks, if you can believe that. And they're still yielding a significant 6% dividend. And these energy companies are dedicated for the dividend. I would say they're as safe as a treasury bond at this point, because these companies will not give this up. They've been doing this for almost a century, these dividends, and they have no intention of cutting it anytime soon. And they have the cash to back these dividends up. So I would not be concerned about that. And as this economy recovers, like I said, we will see Chevron recover as well. And they are highly invested in liquid natural gas as well, so I expect that will be a strong tailwind for them in the future. So Chevron is my energy pick for the oil and gas industry, and I'm sure as oil and gas becomes less and less utilized, it will continue to evolve with the energy market and move towards renewable and alternative sources, as it already has invested largely in these segments. But like I said, oil remains its largest and most profitable commodity and product. So the next company I'm going to look at is a company that is taking advantage of the renewable energy segment, and is the largest solar and wind energy producer in the world. This company has seen, huge growth ever since, since it went public in the 80s. I would go back that far, but it's been a pretty much straight up trajectory since then. It was a great buying opportunity down here in March, like we had with pretty much everything. But I would say this stock is still a buy. We're teetering right here on our February highs, and we could be going up higher. It still produces a 2% dividend, so it's got room for both capital growth as well as a strong dividend yield for those apprehensive investors out there. What energy bears might think, there's still a good amount of opportunity in the energy sector. Chevron and NextEra provide good opportunities for both the renewable push and the market recovery of oil. So thanks for watching, guys, and don't forget to check out Zacks.com/promo for our latest look at commodity innovators from our cohort, Jeremy Mullen. And this is a hot topic right now as the markets start to stall and opportunity in commodities is hot. So check that out, and thanks for watching.